Okay, guys, I hope you are still with me. All right, there's been some hiccups here and there whilst I was recording, but I hope we are still together in the journey. Okay, I've been explaining the personal allowance, that there are several issues you need to consider. The level of income really matter in this module. Okay, the level. Let me just write this down because I've seen people struggling. All right, so level of income matter. All right, it really matters. So you need to when you're looking at the income of an individual, by the end of the day, when you arrive at the net income, okay, this figure, okay, remember it is actually the sum of the non-savings income plus savings income plus dividend income, okay, and you then come to the net income after adjusting for all reliefs and everything else, right? You then have to arrive at the net income. So if this figure is less than 100,000, then it simply means that the full personal allowance is going to be applied on the income. All right. So you first apply it to the non-savings income. Okay, that's where you see you if it is not consumed up, you then apply it to the savings income, then the dividend income, and so forth. All right. So by the end of the day, if the total net income is less than 100,000, then you are entitled to use the personal allowance. Is less than or equal to, let me just say less than or equal to 100,000. Okay, but after 100,000, that's when after 100,000, okay, between 100 and 100,000 and 1 and 125,140. That's when we are going to see the personal allowance reducing, okay, by the 50% of the difference. Okay, so you then have to multiply by the difference, right? And you will arrive at the applicable personal allowance. Then after this figure, after if the income is actually greater than 125,140, then that person is not entitled to the personal allowance. The personal allowance becomes zero. So please, these are the the nitty-gritties you need to understand from the initial uh, foundations of this module. Okay, um, so we have got these explanatory notes which you need to use for you to understand further the aspect of the pro forma table. By the end of the day, if you are not going to use that pro forma, you are not going to earn as many marks as you could. All right. So, but order matters. By the end of the day, you need to ensure that you follow some orders. All right. So, for example, deductions from total income and deductions from, of the personal allowance are applied in the specific order. Like I said, the personal allowance first has to be applied to the non-savings income, then savings income, finally the dividend. So you need to follow that order. All right. And UK taxpayers, as I've already indicated, they are entitled to this personal allowance, which is a tax-free amount. All right. And the rate that is applicable in any particular year is published, all right, is published through the Finance Act, and you in the exam you're going to be given that. So currently for the 2024-2025 year, we are going to use 12,570. All right, now let us get straight to the aspect of these income sources before we move on to the examples. All right. So beyond the paycheck, there is what is called investment income. All right. Investment income is in twofold. All right. We've got savings income or the interest income. All right. As well as dividend income. So these are the two types of investment income. Right, in an MTQ in the section A, questions might come that say which of the following are investment income, are part of the investment income or constitute investment income. You need to be able. Sometimes they put dividend there, and you're not ready to receive that, and you end up choosing the wrong answer. So know that in investment income we've got the interest income, and from our pro forma table we say that this is what is called savings income, the savings income. And then we've got dividend income, right? So it is the dividend income is the income from shares in limited companies. Limited companies are those companies which are incorporated through an act of parliament. For example, the Companies Act or whatever act you are going to use or you are using in your particular country. All right. So that's the idea. And we have already reiterated this point that order matters. So always follow the layout in the pro forma. All right. These are the key tax rates that are going to be applicable. All right. And we have already hinted out that if your income is between, remember, we are using progressive taxation in the UK. All right, low income earners are charged a lower rate of 20%. They are the basic income earners whose income is between £1 and 37,700 pounds. Right, so these are the basic rate payers. And then higher rate taxpayers, these ones are between 37,701 and 125,140. So you can see that there is some synchronization between the personal allowance and the incomes of individuals. All right. So it's very easy to grasp the concept of UK taxation. Okay, if you give yourself time to to assimilate the information, you discover that it's very, very, very easy to master these concepts. All right, I'm sorry, where is my picture? I'm not seeing it. Oh, sorry. So I'll rectify that along the video. Right. Then the additional rate taxpayers, these ones are charged 45% of their income. Their income is above the 125,140 threshold. So anything from 125,141 plus is going to be charged 45%. Okay, but remember I say that do not in a multiple choice question, the examiner might entice you and say ABC, or just say Mr. C is having a salary of say 250,000 pounds. Remember we are using pounds. Okay, 250,000 pounds. What is his tax liability? And you are going to be tempted to just multiply by 45%, just because his income is within the additional rate taxpayers. You are going to be in trouble. You are going to fail. Why? Because it's systematic. Okay, taxation of individuals is different from taxation of corporates. All right, here every level of income is going to be charged a different rate. The first 37,700 pounds are going to be charged at 20%. Then the other income that follows at 40%, and so forth. So it also means that this 45%, if it is only applied on the entire income, you are going to fail. Are we together, ladies and gentlemen? So you need to be very, very systematic. We are going to do an example so that you guys are, are in the best possible position to pass this paper. Now let's talk of savings income. Savings income, there is what is called the new rate band. Okay, the new rate band is £1,000. Okay, you are given a £1,000 if but there is a condition. Okay, there is a condition. Okay, the reason why they put this incentive is that they want to encourage people to use the financial system in the UK, to use the banking system rather. All right, so they encourage people to do some savings. All right, it's good socially because you need to be having some security, some cushion to guard against some eventualities, unknown eventualities or unexpected eventualities. So you need to have something in the bank account. But if you put your money in the bank account, it is not going to be idle. It is expected that it is going to grow and so forth. So it is going to assist you financially as you go. So they are encouraging investments in general. All right. So to encourage or to incentivize people to do that or to follow that route, they offer some incentive, taxation reliefs. All right. So there is a new rate. You're not going to be charged for the first £1,000 of your income. All right. That is if you are a basic rate taxpayer. Okay. A basic rate taxpayer is somebody whose income, all right, whose income is between £1 and £37,700. All right, so that's the best rate. So if your non-savings income is between that rate, then you are going to enjoy the first 1,000 of your savings income. Remember, savings income is interest income. Interest income. Okay, so on the table there, let me just take you back a bit. Okay, on the table there. All right, this is the savings income we are talking about. All right, so this income, all right, the income, we say that it has got some reliefs that are attached to it. All right, it has got some reliefs that are attached to it. All right, and these reliefs, all right, could be maybe the interest paid. Interest paid. All right, so you must not confuse this, the interest paid or the trading loss reliefs and so forth. You must not confuse them with the 1,000 I'm talking about, right? But I'm simply saying that when you are now, because remember the pro forma is only there to assist us to determine the taxable income. All right, there is going to be a table I'm going to show you for the calculation of the income tax itself. Income tax is the tax on taxable income. Okay, income tax is the tax on taxable income. So I'll show you how the 1,000 is going to be applied on the savings income. We are simply saying that this total savings income is going to be reduced by £1,000. The first, if say the savings income is £5,000, just for an example, just out of interest. Okay, after you do all the adjustments, you determine that the ultimate savings income is £5,000. You then have to subject it to the new rate or the new rate incentive of $1,000, which means before you apply any tax, you must deduct the $1,000, and you remain with $4,000. The $4,000 is the amount you then have to subject to the taxation or to the tax rate. For example, 20%, which means you are going to pay $800 on, as the tax on the savings income. Don't worry. For now, don't worry. I'm going to show you how you are going to navigate that header. So, all right, sorry. Still on the savings income, there is something we need to take heed of. All right. We have been told of the 1,000 new rate band, but this one is subject to certain conditions. All right. So if you read here, starting rate for savings is 0%, applies to the first 5,000 pounds of taxable income, and only if non-savings income is less than 5,000. So what are we saying? If you come back to the pro forma table, for you to apply the 1,000 pounds on the savings income, this taxpayer should have this amount being less than, the amount should be less than 5,000 pounds. Okay? It should be less than 5,000 pounds. Why? Because the taxman has already indicated, okay? The taxman has already indicated that for you to enjoy this, your non-savings income should be less than 5,000 pounds. For us to get, they want to encourage, this incentive is to encourage investments. They want you to have your income in the form of investment, not ordinary business. Okay, so they're encouraging a certain group of people or taxpayers to earn their income through investments. Right? You need to deposit whatever money you have into an account that is going to yield some high interest. Are we together, ladies and gentlemen? So put that in mind. Now, if the taxpayer belongs to the higher rate is the rate that is above the basic rate. This is the rate where we charge 40%. Those taxpayers are also not neglected by the taxman. The taxman is simply saying that if you are a higher rate taxpayer, instead of deducting the £1,000, you are going to deduct £500 from the savings income. Okay, now here, because you are a higher rate taxpayer, obviously there are many chances that your income is likely to be above 5,000. Obviously, your non-savings income usually is likely to be above. Okay, but even if it is not above the 5,000, your non-savings income alone, but because your ultimate net income is within this range, the 37,701 and 125,140, you are only allowed to deduct £500. That's the rule. Okay, you understand this as we do an example, don't worry. Then, if you are an additional rate taxpayer, somebody whose income is going to be charged at 45% tax rate, then obviously you're not going to get a new rate tax tax band or incentive. Are we together? Then what rates are we going to apply on the savings income? The savings income are going to be charged in line with progressive tax rules or tax rates. Okay, there is a 20% for the basic tax rate taxpayer, basic rate taxpayer, and then 40% and 45%. Now let's move on the dividend income. Dividend new rate is also there, okay, but for the year 2024-2025, the new rate is going to be £500. Dividend income exceeding new rate band is taxed, right? We are going to be taxed at 8.75. This one follows the 8.75 is for the basic rate taxpayers, all right? Then the 33.75 is for the higher rate, and then the ultimate is for the additional rate taxpayers. All right, you will understand this through an example. Let us do the first example. Oliver's interest income. Oliver has a trading profit of £30,000 and bank deposit interest of 12,000 in 2024-2025. Once again, you need to have your pro forma at the back of your mind. All right, so here's our pro forma table. We start with the non-savings income, followed by the savings income. If there have been some dividends, we were going to add the columns in that order. All right, so let's start with the non-savings income. We are told that Oliver has got a trading profit. Trading profit should then be our first item to deal with, and this is 30,000, which has to be put under the non-savings income. All right, then we are told that this guy also had a bank deposit, which is a savings income, right? Bank deposit interest. All right, the deposit would have been maybe 100,000. Maybe he deposited 100,000 to us, or in the computation of taxation, it's not necessary. Okay, we are only interested in the income he obtained after he put the capital investment, right? Because the interest he earned after doing the investment move, or after making the investment move, is what the taxpayer is interested in. We are interested in the benefit in that move he took. So the benefit is in the form of interest income. So we are going to charge tax on that income. Are we together, ladies and gentlemen? So the amount of investment is not necessary to us. So we are going to be interested on the income, the interest he earned after making the deposit. Okay, so if no further information is then provided, we total up, and we obtained here 30,000, here 12,000. Remember, this outer column is for totals. Okay, what we have in this row is added across, and we arrive at the total there, and we arrive at the total after summing up the figures. Then we ask ourselves, this is the total net income. It informs us whether Oliver is entitled to the personal allowance. Remember, if the total net income is 100,000 or less, we are going to entitle Oliver to a full personal allowance, which is 12,570, and his net income is actually going to be that one. All right, in terms of non-savings income. All right, in terms of non-savings income. But that alone is not going to inform us in terms of whether we are going to group Oliver as a basic rate taxpayer or a higher rate taxpayer, and so forth. We are going to add other incomes, and we arrive at this ultimate figure That's the taxable, the ultimate taxable figure that is going to tell us whether Oliver is a best grade taxpayer or somebody else. This is when we do our tax computation, we then have to ensure that this figure has been covered in its entirety. But like I told you, like I said, do not be hoodwinked, do not be tricked, and simply apply the whole rate if this figure is above other bands, other tax bands. Do not be tricked into simply applying a single rate. You're going to be in trouble. But here, because the rate is within the basic, remember the basic rate is between £1 and £37,700. This is the basic rate. So obviously there you are entitled to simply rush into that. But because there is also another income called savings income, then you need then to be very, very careful. Be careful there. Do not just jump into conclusion. You need to be very, very systematic when doing these computations, ladies and gentlemen. Please be very, very systematic. So you need to come up to your Excel and say tax calculations just below your pro forma, because remember this has been our pro forma. Okay, this has been our pro forma. All this has been the pro forma we have been talking about all along. That's a pro forma. But now, like I then said, you then have to do what is called the tax calculation or the computation of the income tax liability. So you then have to do it in order. You start with the savings income. Savings income, you ask yourself, savings in terms of non-savings income, how much did Oliver have? Oliver is somebody who is earning. Okay, Oliver is earning 17,430. Then 17,430. Where is it? Is it a basic rate taxpayer? Is it within the basic rate taxpayer bracket or outside? 17,400 is actually within the basic rate. Okay, good. So if it is the basic rate, we are going to use the 20%. So obviously that's the non-savings tax. Okay, remember this is the tax amount. All right, that's the tax. But we still have this income. It also has to be taxed. All right, that income still has to be taxed. Okay, now remember we talked of the £1,000 incentive. If you deposit money in a UK bank account, you are going to be entitled by the taxman to first deduct the £1,000. All right, the £1,000. If you are a basic rate taxpayer. Okay. So in this case, Oliver is a basic rate taxpayer, right? So he's entitled to the £1,000. So the 1,000 is going to be charged at the new rate at 0%. So there is 0% tax. In the examination, you need to put that 0. The examiner would award you a half mark or a full mark by putting that 0. If you do not put a 0, you ignore, you tell yourself in your head that, okay, fine, we have to deduct 1,000 and multiply it by a 0. So, and then you solved it in your head. Even if you put the 11,000 here, the 11,000 is 12,000 minus 1,000. even if you put the 11,000 but ignored to put that zero there, the 1,000 at 0%, you're going to get, you're not going to get a mark. You'll be losing a mark. Then the 11,000 is going to be applied to the same rate for basic taxpayers. Remember, the 1,000 was applied because we said Oliver is a basic rate taxpayer. So, because it's a basic rate taxpayer, we are also going to apply the 20% on the 11,000, and the tax will be 2,200. So the total tax liability will be 3,484 plus 0 plus 2,200, and we get 5,686. But we also talked of the £5,000 allowance, which is given to certain non-savings income. But we say that you are only going to be entitled to the £5,000 relief if your income does not exceed the £5,000. So the moment your income, like for example here, the non-savings income is 17,430. So it means automatically we are not going to apply that 5,000. Okay, there are some nitty-gritties around the 5,000. There are some some computations which are sometimes complex, which are involved in that in the use of that 5,000, as you will see in the next examples. All right, let's look at this one. Here we are talking of higher savings. Oliver is earning an interest of 28,000 instead of the previously he has been earning 12,000, but now the interest has shifted up to 20,000 pounds. He's earning more now. All right. The pro forma table and the tax computations would be like this. The trading income is to 30,000, all right, but the bank deposit interest is now 28,000. The total column still follows the sum protocol. Then the total income, right, here we get 30,000, here 28, and this becomes 58,000. All right, still 58,000 is still under 100,000 income, so the personal allowance of 12,570 still applies, and the total net non-savings income is 17,430. The savings, that one, and the ultimate income is 45,430. All right, so because the ultimate income is now above the first band. Remember, the first band is £1 and 700 pounds. That's the basic rate. But now we are now in the second, the higher rate, which is 37,700 pounds and 125,140 pounds. All right, so that's where we are going to get the 45,000, is between this rate. So Oliver is now a higher rate taxpayer, so he is no longer entitled to the 1,000 advantage on his savings income, but he is then entitled to £500. All right, let me try to show you this information. Let me show you this information on the tax rates. The tax tables. All right. Ladies and gentlemen, these are our tax tables. We talked about them yesterday, right? So you are seeing here that he is now a higher rate taxpayer, right? Remember, this is savings income. So the new rate, 1,000 band, is only applicable if he is a basic rate taxpayer. But the moment he becomes a higher rate, taxpayer, then he is entitled to £500. But when he goes outside the bracket of higher rates, then it means that he is not going to enjoy anything. That's why we say that his benefit on savings income becomes zero. All right. But for dividends, such restrictions is not, such restriction is not there, as you will see, right? So in this case now, ladies and gentlemen, we are good to go. I'm sure so far so good. Everyone is happy. I guess so. All right. So where's my pen? Okay, so we start our computations. Okay, we are now at the tax computation. We start with the non-savings income, all right, and we take everything about this because it's the non-savings income in total and is within the basic rate. Remember, like I said, it is very wrong to simply apply the rate for the higher rate taxpayer. Higher rate taxpayers are charged 40%. So if you simply say 45,430 multiplied by 40%, you're going to get a zero. Why? Because you need to be systematic. The first 37,000 or less is subjected to 20% tax. And this is the tax the examiner wants to see. Then you move on to the savings income. You ask yourself, does this guy qualify for any incentive, 1,000 or 500? Yes, a higher rate taxpayer is entitled to £500. So 500 multiplied by 0, you get a 0. That 0 is very important. The examiner wants to see that 0. Even the taxman wants to see that 0. Then we move on. All right, we then move on and say, okay, from 17,000, because one thing I want you to understand, you deal with stages, we deal with the brackets. So we need to first we need to exhaust the basic rate income. We are saying that the basic rate's boundary is 37,700. Okay, that's the boundary from £1 to 37,700 pounds. We then have to deduct, because remember, the total income to be taxed is 45,000. This is the income we need to tax. But we must charge our taxation systematically. We need to exhaust the basic rate first before we jump into the higher rate. So for us to reach 45,000, we need to deduct the 37,700. So we need to exhaust the 37,700. So already we have charged 17,430. All right, we have already charged 17,430 from that 37,700. because every income that is 37,700 or below is going to be charged 20%. So from that 37,700, we've charged 17,430, that figure. All right. So we have also charged 500 at zero. Okay, this one was at zero, but it is already gone. Okay, so those amounts have already departed. So what is the balance we have? All right, what is the balance? 37,700. Let me use my calculator here. 37,700 minus 17,430 minus 500. We are left with 19,770. Still is within the 37,000. So we are going to charge 20% on that. Are we together, ladies and gentlemen? Please follow my steps. Then we are confident that we have exhausted the basic rate. We are now safe to then go to the other rate. Now, the other rate, remember, the other rate is 40%. But how much shall we subject to 40%? We are then guided by the ultimate figure, this figure. This is the ultimate figure. I told you that the income to be charged, the income tax to be computed is actually based on the ultimate tax figure. So we are going to ask ourselves, so far how much have we charged? So far we have charged 37,700. But the person's total income is 45,430. So what is the difference? The difference is the balance figure. There we need 45,430 minus 37,700. So we are left with 7,730, and that is the amount we have to subject to 40%, and we are going to get this figure. So these are the tax amounts we need. So if we add up all these figures, we are going to get that sum. Are we together, ladies and gentlemen? So this is UK taxation for you, and I'm sure you are appreciating. Now let's look at a situation where somebody might not be having any other income except savings income. Yeah, it happens. Some people do not want to work, do not want to even do trade. They simply just take whatever amount. Maybe somebody is a pensioner, right? Maybe he's a pensioner. He has obtained his gratuities and everything. He just put all the monies in an investment house or in a bank. So they start to receive interest on those investments. All right. So like as usual, you need to have the pro forma in mind. Okay, if the non-savings income is zero, just leave it alone. Okay, in that case, where the examiner simply gives you the bank interest as the source of income, if you put in other columns, you're not going to get a mark. All right, that's not where those zeros apply. In that case, in the pro forma, if there is no need for you to put in a column, don't put a column. Okay, you're not going to get any marks for that. But during the tax computation, that's when you need to put a zero where a zero is to be put. Okay, so in this case, this column was not necessary. Okay, that column was not necessary, but for the purpose of learning, for you to get used to the computations, we put it there, and for you to understand the flow. Okay, so there is no trading income. This income is not there. All right, so the income we only have is the bank deposit interest, and we are told that this guy is earning 25,000, so the total becomes 25,000 there, the total income, whatever. Okay, so this one, since it's 25,000, so it simply means that the income is below 100,000. So Oliver, this guy Zara is entitled to a full personal allowance of 12,570. So if we deduct that amount from 25,000, we are going to arrive at the difference of 12,430, and this becomes the total income. All right, so we need to then appreciate that because there is a zero here in terms of non-savings income, all right, so this guy automatically qualifies to that allowance of 5,000. Remember, we said that it is only given to individuals whose non-savings income is below 5,000, is 5,000 or below. All right, so actually it needs to be below 5,000. If your income is 5,000 below, you're not going to get any benefit. All right, but if it is below 5,000, then you start to get the benefit. Okay, so here the benefit is going to get is a reduction in tax. Reduction in tax. So you can see that the UK favors savings income, right? Because on top of the personal allowance, an individual is going to enjoy a 5,000 full reduction in tax. Okay, the 5,000 here is going to be charged at zero, and we get a zero tax charge. Then this guy again is also, because he's a basic rate taxpayer, is also entitled to the full £1,000. We have been talking about this 1,000 so far, so please do not be lost along the way. So there is a zero charge. So already 6,000 has been removed from his taxable income. Then we are left now with the balance, and this balance is, remember, the ultimate tax is 12,430. So we have already removed 6,000 on the free tax, right? So we are left with 6,430, right? And it's still in the basic rate. So this is why we are charging 20% basic rate, and we get that one. So the ultimate tax liability becomes that one. So it's very, 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 very simple, ladies and gentlemen. Taxation is something that is enjoyable, something that is very easy. Everybody must pass this subject. All right, please, everybody should pass this subject. All right, like I always say, after watching the videos, you need to then attempt our weekly assignments, because if you simply watch the videos, you're not going to benefit anything. You need to then subject yourself to continuous assessment. You need to have the tutor by your side. So this is the computation in a situation where there is only savings income. All right, so let's proceed. Remember, we say that there are a lot of computations you need to get used to, and the videos are always going to be there to assist you. So please hang on, continue to watch. In this situation, we have got a person or a guy called Noah. This guy has got mixed income. He has got both trading profit and bank interest. We need to compute his trading, his income tax liability, or his tax. So let's start with the pro forma. Okay, we've got the non-savings income, savings income, and the total. The trading income was 15,000 according to the question, so the total becomes 15,000. Then this guy has got bank deposit interest of 20,000. That's the total. So if you total up, you get 15, 20, and 35. Now, when you reach at the 35, you ask yourself, is this above 100,000 or below? This guy is below, so therefore we are entitled to the 12,570 personal allowance. Okay, and then from there you then have to then finish the computation and arrive at the taxable income. All right, this one, that one, and this is the ultimate. So this guy is a basic rate taxpayer. Okay, but one thing of interest is that this guy is also a partaker of the £5,000 relief if the non-savings income is less than 5,000. You need to have a relief on your savings income. All right, so the relief will apply to the savings income. But now, are you going to get the full 5,000? In this case, you're not going to get the full 5,000. Why? Because part of the benefit has been consumed by your income there. So the income has consumed part of the benefit. So the 2,430 has consumed your income. So what it means is that you are only going to enjoy the balance. So 5,000 minus 240, 2,430, you are going to get 2,570. So this is the benefit you are seeing there, 2,570, which is going to be charged at 0%, and that 0 is there. Okay, the 240 is going to be charged, 2,430 is going to be charged at 20%, and you get that tax for non-savings income. Then, because this guy is a basic rate taxpayer, he is also going to be subjected to the $1,000 benefit at 0%, and that one is going to be entitled to him. Then, as we are still within the basic rate tax bracket, we are going to subject the balance 16,430 to 20%, and we yield a tax of 3,286, which has to be paid. Okay, this is the tax liability. We add up the figures in this column, we add up, and we arrive at that figure. Is that okay, ladies and gentlemen? I'm sure it is. Okay, this balance, we now know how to compute it. All right, because remember, the ultimate tax is this figure, right? 22,430. Then you ask yourself, which taxes, which amounts have been dealt with so far? Which amounts have been dealt with so far? Remember, you start from the non-savings, going to the savings, then to the dividends. So we have already dealt with the non-savings. We deducted 2,430. All right. Then on the savings income, we deducted 2,570. This one has already been dealt with. Okay. Here we charged 20%, but here we charged 0%. Okay, because it's a qualifying amount. And then we also deducted 1,000 at 0%. So what is the balance? 22,430 minus 2,430 minus 2,570 minus 1,000. You see that the balance is 16,430. So tax is something that is very enjoyable, something that, is non-exhausting. There is always going to be some momentum as you continue to practice, as you continue to work out these figures. You're going to be interested, you're going to be motivated to do more. Are we together, ladies and gentlemen? Thank you. Let's proceed with the computations.